Good morning, good afternoon, good evening. Welcome to today's Grain Market Blast, where myself and the amazing Angie Setzer will be providing a rapid roundup of the latest pricing, flows and market moving news in agricultural markets. But before, and let's be honest, it's mainly Angie that does this, before Angie does get this underway, I'll get the legals out the way. So as usual, nothing discussed on this basis session constitutes trading or investment advice or infers any kind of endorsement by PIQ, myself, Ryan Paisley, or indeed the Angie Setzer, and that's Angie Setzer with a capital G for glamorous. How the devil are you, my love?
I'm super happy Monday. It's Monday again. Time to make the donuts. She says with a cigarette hanging out of the corner of her mouth. Not really, but that's how
It
I
already
feel.
feels like a Tuesday to me.
Really? That's because you're already it's 2:30 almost where you
Oh
are.
yeah, true. Yeah,
Which
I'm already halfway through my day.
is also the time it is when you go to the dentist. 2:30.
Yeah.
2:30. Get it?
Chinese dentist, yeah. Chinese
Anyway.
dentist, yeah.
Happy Monday. Now that, we're all here. This is one of those days where it's like, okay, I have a ton of stuff to talk about, but I really don't know how to organize it in a way that makes sense. And, everyone can kind of walk away from this and be like, wow, she knows what she's talking about. So let's start anyway with the RVO update, the reaction and our next steps. So Friday morning, as we were wrapping up our blast, we started to get the headlines out that the RVO,
Yes.
the renewable volumes obligations had been sent from the EPA to the White House and back, or however that works, basically. And so, it came in at a much higher level than what traders were expecting, even higher than what the industry had pushed for. So this is one of those things where we'd had a couple different rumors out early in the week. We'd had a couple different, crushers, or one particular crusher in the US that kind of completely destroyed the market the day prior to this coming out, or 2 days prior to this coming out, on the back of, oh, what do they know that we don't sort of deal, and talk that, yeah, it's going to be worse. I'd had someone from, the industry kind of say, hey, we've been told by our lobbyists that we're not going to be sad about this. We don't have the number, but we've been told that we'll be very happy. And it turns out that it came in better, like I said, than expected, at 5.61 billion gallons worth of biomass.
And that was ADM, wasn't it?
ADM, that destroyed the market. Yeah. So basically they just went from old crop to new crop. Like in the middle of June, it's very rare to see a bid just completely go from, hey, yeah, we want to pay you a premium for these products that you have, or these bushels that you have in the pipeline. Sorry, the neighbor's going by with a tractor. If you can hear, that's extra loud today.
Yeah.
I'm sorry. I didn't realize that we were going to have a parade. They'd come out and basically said, we're going to new crop. We've tried to pay up for beans. Margins are poor. There's rumors. They didn't say this, but people had said that they had said it, whatever. That the RVO thing's going to be bad. So we're just going to go ahead and go to new crop bid. It kind of really caught people, flat footed in a lot of ways. But, so the Friday announcement really, I actually had a conversation, Seth Meyer, from the USDA, the chief economist there, head economist dude called me, and he was like, this is fantastic news for the domestic crush industry. He was giddy, and so to hear him be giddy, I'm gonna go ahead and be giddy too. And so there is some uncertainty over how we'll handle the small refinery exemption. So that's really kind of the one caveat, if you will. As to what this looks like. There will be a reallocation though. So basically what's happened is over the years, you've had folks, kind of come out and be like, hey, we can't buy these RINs. We can't blend this biofuel into our fuel. It's going to hurt us economically to do it. Could you go ahead and make it to where we don't have to do that? We don't have to, adhere to the RFS or whatever. And so there's 160 of those requests. We don't know all of them, which ones will be accepted, which ones won't. There's some of them dating back to 16, which is really kind of surprising to me because that's a long time ago. And, worked its way through the first Trump administration. So several things there that are supportive. And I think that just really reinforces, and a lot of folks weren't anticipating to see this from the administration. The first round of the Trump administration wasn't necessarily very supportive of biofuels. I've been adamant that this is the lowest hanging fruit for the industry, for the administration to really kind of support the industry. And so as you're seeing now, we've had soybeans were limited up on Friday. Soybean oil, excuse me. Soybeans were up 26. Soybean oil was limited up on Friday. It's, up another $3 here today. That's super supportive to crush margins. And, as Seth had said, this will be super supportive to crush demand going forward. Now, there's an argument, right now you've got a certain group of people that are just inherently super negative all the time about everything, where they're like, well, this doesn't change the S&D. It does, to a certain extent, because the USDA was not forecasting a full usage of crush capacity. They were taking into consideration the usage of crush capacity, or the usage rate that would come in hand with basically the exports they were projecting, plus the domestic demand for fuel and food. And so this can change it, because I do, I'd have to look to see, but I do not believe the USDA is close to forecasting max crush, in any way. So we'll have to take a look at that and see. But that's the biggest story on the demand side. Otherwise, we obviously have the geopolitics. We have our confrontation, or whatever. I guess, can you call it a war at this point between Israel and Iran?
Uh,
Conflict is
conflict. Yeah,
no,
let's go
no.
conflict at
How
the
do you,
moment. Let's go
how
conflict.
is it, when does it become a war? If it extends past a week, or
Yeah,
someone that says that it is?
yeah.
Okay.
It's very much like, when does a pond become a lake?
Yeah.
That kind of vibe.
Or a creek become a creek. Anyway, or, when it comes down to, but, so we have our Iran-Israel conflict. We'll say the crude oil market is either reacting like there's a peace deal in the works, or it's recognizing that you're probably not really impacting crude production. I have heard through the grapevine that you're a former energy,
Oh, stop it!
trader.
Stop it!
So
Stop it! Stop
thoughts
it!
on that in particular? Is that why crude's down a buck
Well,
today?
the thing is, it's almost like the trade that never loses is to fade a Monday spike or a Sunday night spike in energy
Yeah.
markets. It's because there's a lot of people, as soon as you hear the word missile and Iran in the same sentence, people, the usual talking heads claim that we're going to see $100 oil.
Yes.
It's not the case. We need a tax, and the targets to be specifically energy installations.
Yes.
And at the moment,
Oh. We may have lost him. I'm not sure. Or I lost him. Either way, that last chapter might need to be a mystery. I'm not sure if Ryan, if you come back, it might be me too. So we'll see. But so yeah, we have the weather side of, or the geopolitical side of things. We're watching what's going on between Israel and Iran. We'd seen over the weekend that Trump had kind of poo-pooed a push potentially to assassinate the supreme leader of Iran. I think they were kind of like, yeah, replacing leaders has not worked out great for us in the past, so we probably won't do that this time around. Though it is interesting, basically Israel said that they have full air control, or they're basically dominant, in the airspace over Tehran, and a few things like that. It's going to be one of those that we're going to have to watch. From a grain standpoint, I don't think it has a huge impact, though I will say, like I've said before, when you have a population that's fleeing, it's generally not bullish demand. You're not sitting and there you are. You're back. You're kind.
so what
Yes,
can you hear me
please.
now?
Yes, please do.
Right. So what I was about to say. So yeah. So we heard a lot of talking heads. It's usually the same old people, like calling $100-$200 oil based on nothing really. One headline, and this was really proven over the weekend, where there was a lot of people suggesting that basically the biggest oil gas field in the world was basically set ablaze by
Yeah.
Iran. If you'd have read the headlines and you'd have read Twitter, that's what you would have believed. When in actual fact, yes, the Pars field is the biggest in the world, but Iran share it with Qatar. Um, but the thing about this is, and this is where you really need to understand what is going on, is the fact that it was the phase 14 element, which is one small facility that Iran control, which has no impact on external supply. It's basically just a small domestic outlet facility. And this is what was attacked. And it's basically, and we've seen similar like over the years gone by. I remember a few years ago, oil gapped up something silly like, I want to say like $50. It was something extreme, and basically it was because we had news that I think it was Iran had fired a missile at a Saudi oil facility. We then find out, a few hours later, that actually this facility had been decommissioned. So it really does matter the quality of what the target is, not just kind of, oh, it's energy related. Oh my God, that means oil is like going to go to 1 million, all this stuff. And the same with the Strait of Hormuz. Like I've been saying since Thursday, the last thing that Iran will do is block the Strait of Hormuz, because it really does put them in a probably more bother than anyone
It hurts
else.
them more than it hurts us.
Exactly, on multiple levels. On multiple levels, we said on Fridays, they've only got a few friends in the region these days. They're going to piss all of those off. They've only got one real inlet for kind of goods and the supply of goods and the export of energy, which they need both of. And that's the Strait of Hormuz. They simply won't be doing it. But anyway, sorry
Which
for
is,
cutting
no,
up.
no.
Yeah.
I appreciate that. It's also great news because I'd meant to fill up Friday. Well, actually Thursday, and then this happened. I was like, oh crap, I should really fill up Friday. And then I forgot again. And, so we're on fumes. Not really on fumes over here,
I think
but
it's like a rule of thumb. Anyone that's looking at the crude markets there and even stocks and going, "Oh my God, this is broken." Energy should be up like way higher. Stocks should be down loads. Anyone that you see saying that, it's a good litmus test to kind of make you realize that they actually don't really understand what markets should be doing. And if you give them a wide, this is what I mean. I love times like this. I love times of stress because it really does pull the masks down on people that kind of are giving it the big un and making out they know a lot more than what they truly do. Because in times like this, you really see what people really do understand about markets.
it reminds me of when we saw the Russian invasion of Ukraine initially, and everyone was screaming we were going to run out of food. That sort of kind of
Yeah,
deal where it's like, no,
exactly. Anyone
calm
saying
down.
that, in future, their card is marked.
Right. Or it should be. But yeah, so, moving forward, weather-wise here, everything looks very wet. And so in, the eyes of the traders, wet is, bearish, right? Rain makes grain. I am hearing a lot more in the way of conversation about poor quality wheat. In the South, there's someone that, posted out of North Carolina, recently, talking about, and I mean, not saying that like North Carolina is a massive wheat state by any means, but just this is something that I think you're going to see kind of come about in a lot of the other, especially soft red wheat, states. So your Missouri, Kentucky, Tennessee, Mississippi, Carolinas, Indiana, Ohio, parts of Illinois, where this continuation of exceptionally wet weather on a wheat crop that's getting ready to want to be harvested. Not only do you probably have an increase in a risk of fusarium, vomitoxin. You heard fusarium a couple weeks ago with the Chinese students importing. Yeah, it's already here and it's already a pain in the ass. So you're probably looking at problems with fusarium, vomitoxin potentially, and low falling number. The falling number, it will be something that we'll want to watch because that's going to be something that will work its way into the feed trade relatively easily. VOM can be problematic depending on the level of VOM that you have on what it can be fed or what it can replace. Especially with cheap corn, you're not going to be in as big a hurry to upset the apple cart, if you will, from a ration standpoint. And so that is one of the things that I'm watching is the continuation of heavy rain, on wheat that wants to be harvested is never a great thing. Been there, done that. They don't give you a t-shirt. They just give you $1 for your wheat and tell you to enjoy. They're just like, get the hell out of here with your crap. And so that'll be one of the things that we'll be watching. It also is a little problematic and, like the market, like I said, doesn't understand, wet weather, and what it can do in certain areas. Now, I'm not going to say that, this is a widespread instance or widespread, problem, but I do have a lot of growers to the south of me, across parts of Indiana, especially over into Ohio, that I've talked to, that just things don't look great. They always say the old adage is a dry year will scare you, a wet year will kill you. And a lot of times you just don't really, you're fighting battles that you don't really want to fight. That everything's muddy and gross and just, bleh. And so I don't know if we'll start to discuss yield potential or whatnot. There's going to be a whole group of people out there though that are going to look at the rain falling and say, oh, well, it's a 186. And all those people I hate, just so you know, even if they're friends of mine, I hate you. Just, clear, simple. We're not friends, basically, cause I can't stand that, but it happens every year and it is what it is. And so weather-wise, there's no real risk. That's part of the reason why you're seeing the market down. Obviously, soybeans are being supported by an increase in demand and concerned that the continuation of wet weather is going to limit how many more soybeans we can put in. We are getting towards, the last couple of weeks. Like I'm going to say, people are going to put beans in, as you work towards the fourth, or at the very least they have in the past when beans, when beans were actually something you can make money on, folks would really push it. So we'll see if they kind of work to incentivize people planting beans, because we do have a sub 300 million bushel new crop carryout. Like everyone's acting like we just have this 500 million million bushel projection, mostly because analysts have made one up in their brain. They're just like, well, exports are going to be lower, so we might as well just bump, like a farmer does it, they're delusional, an analyst does it, they're, cutting edge. So whatever. So that'll be one of the things that we're watching here. And beyond that, we'll be paying attention this week to South American markets, just kind of what's going on with movement. Everyone's anticipating, like right now, if you talk to people in the cash trade, the conversation is, oh, well, it's going to get cheaper because the farmer has to sell. It's going to get cheaper because the farmer is going to let it go. But then you start to look at what's going on in Brazil, and they're looking at a record large import of silo bags. You're looking at, continued growth, in the domestic storage sort of capacity, on that side of things. You've got domestic demand that's continuing to grow pretty decently with ethanol and things like that. And so it'll be interesting to see. We kind of were here, I feel like last fall with everyone in the U.S. thinking that the U.S. farmer was going to puke a crop and they were going to buy it a lot, much, much cheaper. And at harvest time you did see we were 80 under basis, but suddenly within, 3-4 weeks it snapped back 50 cents plus, because people put the crop away and they aren't going to get it back out until they're back above the cost of production. Once you get to where you can buy it on the board cheaper, that you can grow it in the field, you're at an unsustainable level. First off, you're continuing to encourage demand. Secondly, you're continuing to discourage production. And so that'll be something that we'll be watching this week. We'll see where we head. But right now, beans are up 7-8 cents, depending on which month you're looking at. Corn's down a nickel. Wheat's trying to crawl its way back. It's down 5. And yeah, we'll see where the day goes.
Awesome stuff, Angie. Thank you so much, as usual, for being your wonderful, glamorous with a capital G self. Listeners, thank you so much, as always, for listening in. Just a bit of personal news, because I know a few of you have been reaching out privately to ask how my dad has been doing, after his triple heart bypass. He's doing very well. Thank you for asking. So much love to everyone that's been showing their support on that front. But back to what we're here for. Again, thank you for listening in. And yeah, me and Angie will catch you all tomorrow. Much love.
Have a good one, guys.